Hello and welcome to the Economic Times CFO Strategy Summit 2020, where leading experts across industries and borders engaged in discussions to better understand how to outpace and outperform amid industry disruptions. First up, chief guest, the Honorable Minister of State for the Ministry of Finance and Corporate Affairs, Shri Anurag Thakur, shares his outlook on Indian economic policy and its impact on businesses in the COVID-19 era.
The COVID-19 pandemic has unsettled the world, undermined established norms, underlined the importance of good health in our personal lives, businesses, and the economy as a whole. It has made us rethink, reimagine, and reset our lives and livelihoods too. Despite the adversity facing us, India has decided to turn this into an opportunity. As the world grapples with the pandemic, India, under the leadership of Prime Minister Modi, has decided to reboot, reform, and research on the path of Atmanirbhar Bharat for economic revival. Atmanirbhar is the vision of self-reliant India that creates value and wealth for all. As CFOs, I hope you'll grasp the opportunities and propel your organizations on the road of Atmanirbhar Bharat. And I'm sure with visionary leaders like you, India is going to grow and not only achieve $5 trillion economy mark by 2025, but also $10 trillion economy mark by 2030.
Next up, we bring you a panel discussion where thought leaders share their take on how to re-strategize and rebuild the business models to drive results in these dynamic times.
Given the situation, travel was restricted, airports had a deserted look, and he had a tough task on his hands. So Bhaskar, over to you to provide your perspective on how did you go about doing it, or how did we all manage the whole situation?
The crisis has impacted aviation business tremendously. What we did was to rebuild our business plan, and that's for the long term. But for the short term, we said we'll do a progressive calibration, quarter by quarter change of our budget for the current year. And three very important things that came up. One was people. Almost 40-45% of our cost structure is people. The easiest would have been to say furlough or to fire. But we said, no, we will not do that. We will put a freeze on any new manpower recruitment. What we will do is we'll try to cut cost in every other area. So we developed what is called a BIAL 2.0 framework, which basically looked at how do we look at people optimization, how do we look at cost optimization, and how do we build onto the synergies that we already have so that we become more efficient. So it's actually a very agile sort of a situation, a very dynamic sort of a situation, and we're still coping up with this.
I would like to now move on to Nilanjan Roy. How did this impact you in Impact Infosys?
We were very clear in Infosys that we need to come out stronger from this crisis than what we enjoyed on a competitive situation. And knowing that, our first decision, of course, was whatever we do, the health and safety of employees for us is paramount. As you know, our business, 97% of our revenues comes from outside India, across 45 countries, whereas 70% of our workforce sits in India. So we had to address both the supply side and the demand side with equal alacrity. I think business models are going to change. And I think more importantly, rather than wasting too much time on scenario planning, I think it's time to take the initiative, time to act, because this will be the new normal.
I would now like to turn around to Abhishek. How did this impact you guys, and what did you guys do?
When this sort of hit us, and it hit us early because we had, assets in China as well. So around the time of Chinese New Year, we saw it coming, and we were able to sort of not really anticipate, but at least get a sense of what this could mean for our businesses around the world. In terms of our approach to this, using technology, we were always a technology-led company, but we completely reimagined our go-to-market and how do we onboard new assets, hotels and homes through a completely remote operations. How do we audit and ensure quality of the service through our tech products? How do we service our consumers better through chatbots? And completely redesign and reimagine the product experience. So look, I think in terms of scenario planning and cash, we almost did scenarios saying imagine no revenue. And I think as we emerge out of this, and emerge we will, we would be a much more sustainable and a leaner organization with actually a faster path to profit.
I would like to turn around to John Nordsmith.
We know right now cash is king globally. It doesn't matter in which country in the world you are right now. If you run out of cash, your business is going under. So I think, a lot of our clients, we're in the services industry, a lot of our clients have really looked at it and said, you know what, cash is king. However, we cannot stop the business. We cannot just shut down. We have to really think about, where do we take our money? Do we have to make investments? If so, what do those investments look like? Because we want to make sure that we spend a lot more scrutiny now on essential investments. So I think we'll never truly shift back into the old normal, and we'll continue to use technology, and we'll continue to work with our clients to prepare them from a financial perspective.
It would be very, very interesting to learn from Robbie in terms of how Adani has gone about looking at this pandemic and reacted to it or managed this entire strategy and financing, as the case might be.
Well, the first foremost point for us was that a very large part of our business, very significant part of our business, is absolute core essential services. Provision of power, gas distribution, power transmission, power generation. So therefore, we faced one big issue. How do you maintain this? And how do you continue the essential services during this time when even the health norms were not clear as to what you could do? We had to reorient that. A lot of our leadership time went into that with the relevant CEOs of our verticals. The other aspect is that what we found was that working in remote areas, there was this vendor mobilization. The work had to continue, and we don't have 100%. So we have contract staff, contracts given out. And so what we found out was that one of the things that we could actually play a meaningful role is to continue to deploy local vendors. So that was a big learning for us.
Rohit, from your point of view, how do you think ClearTax specifically and startups in general should or could or will deal with this situation?
So we decided very early that it's not going to be L, right, for sure. We also could see it's not going to be V shape. So we decided to stick with the U shape, and we decided that no matter what happens, our planning will be U-shaped, and if we have to be fluid, so be it, right? Then the other thing I think Arjun also mentioned is, startups come in different shapes and sizes, and there are many of you may know, many of you may not, right? Like there's like tens of thousands of startups being formed every year in India, right? The pace is absolutely dramatic. So the social networks there are extremely tight, right? So now every other business was making extremely deep cuts, right? So we had to think through what to do over there and so on. And there was a lot of self-doubt, honestly, going around, right? So I just found myself sitting on several Excel sheets and saying, like, it seems like we're going to survive, but, could I be wrong, right? Because those questions were left to a few of us. So we basically said, let's just do what we know best and just continue to do that. And rest of it hopefully should fall in place.
Our next session focuses on how companies can enjoy better business outcomes with a great reset.
Now, the fact that the world we live is no longer linear and with changes accelerating at a lightning speed, we like to coin this the greatest reset of everything. A reset to restoring trust, a reset from rapid iteration, and a reset to everything as a service is what we call subscribing to business outcomes. What does business outcome means? Number one, it's the concept of zero technology debt. You've invested in a lot of ERPs, a lot of technologies, a lot of business application, but you realize that at the end of the day, you end up using 40% of what you bought. So in subscribing to business outcome, which is software as a service model, you only subscribe to what you need. And because of that, there is no concept of technology debt. And second, this whole business model is based on a singular data model, which means that you don't have to worry about how do you go about influencing finance to supply chain, finance to HR, finance to procurement, because these come with connected data and connected intelligence. Second, if you think that the path forward is very complex, software as a services introduces to you a very simple concept of start anywhere and go everywhere with zero integration complexity. And third, I know that, when you talk about asset, from a finance book's perspective, it means a very different dimension. But what I'm talking to you about here is in software as a service, the scope that you subscribe to is based on what you need today. But you realize that in a subscription economy, the organization, in this case, Oracle, we continuously update these capabilities on a quarterly basis with unlimited frictionless innovation, which means that the asset that you bought and you continue to pay the same amount, but the asset is a completely appreciating asset from the time you subscribe to. So these are the three key reasons how organizations in India and global are able to benefit to subscribe to business outcomes. So the time is now. It's an opportunity to pivot forward, defining your future and subscribing to business outcomes. Thank you very much.
Finance function is one of the very good candidates for robotic process automation with the potential to automate nearly 60 to 70% of the business processes within a period of 2 to 3 years time frame in a phase-wise manner. There are some very important considerations to be kept in mind before embarking upon an RPA journey. The RPA journey should be kicked off with a proof of concept that demonstrates the value proposition so that there is a buying in from all the users and stakeholders. Second, explore the use of functionality of discovery bots to discover the processes that should be automated and the level to which these can be automated. Third, explore the usage of advanced functionality of chatbots to ensure that the experience is enhanced with the users of finance department and even the users outside of the organization, such as customers, suppliers, investors, and merchants. Have a systematic and project-oriented RPA roadmap that is owned and monitored by an RPA Center of Excellence, which is constituted with champions from across all the functions. Fifth, overcome the functional silos by integrating the processes of various functions with a common organizational theme and an approach. Sixth, leverage RPA for integrating legacy business applications with emerging technology platforms. And seventh, overcome the myth about RPA, that RPA is going to take away human jobs and make them unemployed and redundant. These automations have enabled human beings to give away the mundane, repetitive work to machines and then focus on creative, innovative, and intuitive areas that have helped organizations to pursue the next level of growth.
Welcome back. Moving on, we bring to you a special fireside chat where global experts talk about how CFOs can be better leaders in the age of the COVID-19 crisis.
What are your top two guidances for the CFOs from a future perspective as they become value guardians of organizations? So from a chief financial officer to a chief value officer, how do they actually help protect long-term value for organizations? So Jack, maybe if you could start off.
Sure. And you're right. It's a crisis and, CFOs and other executives have had to sort of figure this out on their own in real time. One, be scenario planning continuously. Just always be forward looking. The history simply doesn't matter anymore. That's been a natural evolution of the CFO's job. I was a CFO in the 90s. And at that point, it was largely a backwards looking job. And now it's forward looking. But so always be scenario planning. Recognize there's a really good chance you're going to get something wrong, maybe way wrong, and unforeseen things are going to happen. So be prepared to adapt really quickly, fast and flexible. That's the name of the game. And then, you can't emphasize this enough, but communicate continuously. Again, the CFO is so trusted and respected amongst the executive team. So you should always be in communication with your team, with your investors, with your cross-functional executives, with the CEO. You should be talking to him or her every day. Just be talking to everybody, tell the truth, but inspire confidence in them that you're here to stay and that you're going to continue to serve their needs.
Srinivas, over to you.
Oh, absolutely. One is play the co-pilot. You absolutely need to play the co-pilot. That means you need to think like a marketeer. You need to think like a CD person. In simple terms, you need to lead change and transformation. So you need to be risk-taking. and you need to be reluctant. And the second one I will say is take center stage. You need to play. Then there are aspects which you dominate, whether it's your balance sheet, whether it's risk, whether it's governance. And to Jack's point, you absolutely need to communicate with simplicity and clarity, whether it's internal or external, and actually take the team along. So that would really be my reflections.
As a CFO, as a leader of a large digital organization and a fintech player, how do you see digital operations? What is the role of technology? Is it a blocker? Is it an enabler? Very clearly, everyone sees it as an enabler. But anything else that comes to mind on how we should use it cautiously?
Absolutely, Nikhil. I would say more than using the words blocker and enabler, I would say technology is playing the world of a collaborator, right? It is helping multiple trading partners and counterparts and employees and everybody to collaborate with each other. And there's absolutely no doubt, and we have seen that across multiple companies, from very small companies to the largest companies on this planet, adopting digital and technology as a way of life during the current crisis. When we partner with very large companies and with the finance leaders like Srinivas, there is a whole lot of cultural change which is catching up to the finance leaders. So it's no more that I will go and buy the best technology product and allow that to solve the problems for my company, but I will bring a cultural change within my team and within my company, where we say that, okay, I will allow people to question the status quo. I'm not going to punish people who are going to say that, why are we doing this the way it is being done now, right? And that, I think, will be a huge game changer in the long run.
For final words, Yuvraj, over to you. And you've been sitting at the epicenter of the global supply chains, so in a way, and you're seeing sort of the emergence of the new world order of supply chain. So, as a CFO, how do you see the overall role of finance in influencing strategic policies for future growth?
Yeah, I mean, I think the supply chain is the subject matter of massive disruption. It was happening before. It has been massively accelerated as a result of this crisis. And therefore, things like getting onto common technology platforms, using data for artificial intelligence, showing transparency to your customer, like somebody like Srinivas or his company, and those who look at supply chain should know where their product is, how much of it is there, when they need the next piece. And we as solution providers should be able to provide them what is necessary and show them that visibility. So supply chain is going to be a very key infrastructure piece for anybody. It is under massive disruption as we speak. Technology is the disruptor, will enable you to do what is required to disrupt what is a very inefficient global supply chain.
Next up, we bring to you an intriguing session on rethinking the role of finance in a new normal with Rolf Hoffmann.
How is Bayer doing at the moment, and what do you personally feel in this time?
There's probably no industry not impacted by COVID in the current times. Having said that, with Bayer, we had a very powerful intersection in essential industries with healthcare, with agriculture. So therefore, yes, we are impacted, but we are doing, compared to many others, just fairly well. So actually, we're in a pretty good spot. The technical abilities of the company played out very well. So we had no glitches, no problems. We have multiple operations from a shared service center to down to the sales reps activities, production, all went pretty smooth. So from that perspective, I think we're in a very good spot and feel very comfortable.
What did you and Bayer do, let's say, in the area of financial prudency, and how will this continue in the future? How do you see that?
And for me, definitely financial prudency, it's absolutely the base for me for everything what we do, probably as a CFO in the finance world. At Bayer, what we have done to focus on cash in a longer term view, it's part of our short-term incentive program for all managers globally. It's part of our target. So it's deeply ingrained and moved pretty much into the center stage for many years now. Yeah, that you can link to working capital, etc. But overall, liquidity and cash management is the enabler. In COVID, what we also did, like others, we focused very much on cash, preserving cash. to pay all our bills, etc., and to be able to operate, and more important, so to focus also on our employees. Employees clearly came first, and whatever we did, we were able to pay salaries, to keep everybody on the payroll, so nobody left. Key partners we supported very strongly. We went beyond that for further welfare, where we also had the opportunity then to expand insurance coverages for employees, their families. So we used that very strategically as well in the crisis to keep our liquidity position, support partners, key ones, and also then to drive new business opportunities.
Moving along, we have a fireside chat with industry leaders as they discuss managing finances in an uncertain world.
How Bajaj Auto in this particular whole pandemic scenario has dealt with investing funds or even managing funds. Soumen Roy, over to you for your perspectives.
Bajaj Auto, I can say, has ensured, like a lot of other responsible corporates, that all vendor bills are honored that were due all through the pandemic. That is how the whole ecosystem of the whole economy, the wheel, the virtuous cycle of the economy continues to run, because at the end of the day, it is lubricated by this commodity called cash. Investing of surplus, whether it is a long-term surplus or short-term, overnight, temporary surplus, has become a very critical thing, especially with a lot of uncertainties in the major borrowers of the market, namely NBFCs. So I can tell you what we have done. One, we have invested in people. When I say invested in people, we have culled out people whose job is to evaluate mutual funds, especially liquid funds, and also certain corporates where we directly or indirectly invest, whose papers we buy. The last thing that I will say is, in case you have money, which we fortunately have, we have also done a bit of a vendor thing. So we have extended a certain line of credit, and we are extending discounting facilities to our vendors directly, so that they can tide over this crisis and continue their operation.
In these times, what we have done is 2-3 things we have changed. Number one, instead of the macro management, we have done a micro management. So we have been watching the developments very closely. Number two, we have focused a lot on the risk aspect. So therefore, what we have done is that we are investing only in AAA rated investments, and we are not going ahead in any way with regard to any risk. Number three, what we have done is that we have taken more in the form of GSEC securities or even bank fixed deposits, and that to select banks, just to ensure that the risk is not there, and we are willing to compromise on the returns a little bit in the short run, but we do not want to take any risk. We have continued to press our force on the capital expansion. So wherever we required to expand our production capacities, we have actually put more rigor on that, and we have continued to invest. So I think that's the way we have managing our cash surplus.
Subbu, in this kind of a situation, what is your thought process, and what is Titan's really policy or thinking on managing finances or investing extra funds?
So when the pandemic hit us, our first concern was, how do we manage cash? Okay, because the availability of funding, of course, we have a funds limits, etc., with all the banks, but ensuring that there is no crisis and there's no panic situation, and that we were not sure how long we're going to be shut. Therefore, I think the biggest concern was how are we going to meet this situation of where we are in a net debt position. But one of the things that we actually did, we thought about then, and we executed, I thought, very well, was looking at our inventory. You know, the biggest advantage we guys have that maybe others don't have is that we also deal in gold. We deal in gold in a big way. So we said, why not we monetize some of the gold stocks that we have, particularly those which is lying in raw materials and work in progress, etc., so that we bring down our debt to the extent possible. So I think our cash management, was done very, very well. But one of the other reasons where we wanted to be absolutely sure that we have adequate cash was to meet up with what Soumen also said, the vendor base, because we have a very, very large MSME base, which is almost entirely dependent on us, whether it's in the watch business or the jewelry business. These two big businesses, we have a lot of people dependent. So we had to ensure that they are going to be afloat during this period.
Kunal, if you can give a quick closing comment.
It's a great time for us to look at
how as CFOs we can aid the decision making process for our boards, and by virtue of that, determine what are the areas of priority to really go after and make some technological investments to only make the role far more heightened than whatever it is right now. So whether it's around long range plans, whether it's around automation of finance systems, there are a plethora of things. I think it's just important for us to look at what's most important and just go behind it.